Who said trading was an easy pastime? Nice and relaxing. Here we are again in the midst of a banking crisis Mark II. Good morning, boys and girls. Morning, Kay. Morning, Stel.
Morning, morning. Not much to talk about, really. Let's just wrap it.
Yeah, exactly.
Oh,
dearie me. Out of one frying pan into the fire, or into another frying pan. We're going to get burnt feet.
Can I just say something before we start? I'm seeing that Nick Gordon is saying, like, Ryan, my wife thinks you sound like Phil Collins.
Phil Collins?
I think, Nick, I think your wife should really go and see a doctor, you know. I mean, that is, I don't know where she heard
looks like him as well a bit, no?
I was going to say, I'll take that. Phil Collins.
No. I can't. Can somebody erase that comment?
I was going to say he sounds like Turkish from Snatch, the movie, right?
Trust me, you don't want me singing like Dale does. Definitely not. I've got a voice for the football terraces, and that's about it. So yeah,
and you're not singing anymore.
And Mavi Kiemute, the flow show is always at the same time. It's 10:30 a.m. London time. It doesn't change with any US time changes for you guys.
Yes, Mavi.
I
made that a stipulation that all press thumbnails, pictures, adverts have 10:30 UK time, because then it doesn't matter what how the clocks change around the rest of the world. We all know that, or I know that every time it's going to be at 10:30 in the morning, whatever the time is elsewhere. So I'm afraid you have to Google it, your times, but everything's unchanged. Obviously, it's an hour earlier for those folks in the US and wherever else the clocks have changed. But definitely no singing for me, unless I get a winner in my next trade, and then I might start singing. So anyway, lots to cover again. We're in the midst of some risk-off moves, which we'll obviously touch upon in a moment, but we'll get through the rest of the stuff first. In China, they left their one-year MLF rate unchanged at 2.75%, so no signs of further easing there for the moment. In Japan, Finance Minister Suzuki says it's the government's goal for now to achieve a pace of wage hikes exceeding that of inflation. Chief Cabinet Secretary, I believe that's probably Matsuno, said that they're seeing solid wage gains, especially from large companies. So today is Shunto Day. We've not had much out in terms of actual agreements that have been called. I don't know when they're going to drop, or whether they're finalising the talks and then going to be issuing statements or whatnot. But nothing really solid has come out, has it, Kay, so far?
Well, the final counts haven't been done, but if you look at the percentages of what the companies are expecting, it does feel we are going to go. I think Reuters made some rough calculations. We're going to come out somewhere around that 3% mark, which was somewhere of a bar for good or bad. But then,
sorry guys to interrupt. Can we see something on the screen? We're not.
Oh, we're not sharing it yet. Sorry.
No.
Okay. No. So yeah, if the calculations are correct, we're going to come out somewhere around 2.85, 3% all in all, which is a bit surprising, because when I look at how much some of the unions and companies are willing to hike, it looks a bit light. But anyway, already the market this morning was really shrugging it off before the dramatic Credit Suisse story. But yeah, so and it's already said to be a one-off to catch up on prices. So the market was really less than impressed on the results of it. Kishida then came out saying it's a game changer. They will raise the minimum wages above 1,000 yen. You have to know that 1,000 yen is low, okay, compared to other major countries, and really the market was not impressed at all. But if we really come out around the 3 or even below mark, it shouldn't be great.
Yeah, but as Kay says, we've not heard anything concrete as of yet from.
No,
we've heard a few firms over the past couple of months saying they're doing this and that, but nothing full on from this. So we could get a surprise, and maybe hikes are up over 3%, but the market sort of looking at around 3% wage hikes, which means they will need to continue on that path each fiscal year. It's sort of playing a catch-up game, so they'd have to do similar next year. And obviously, if inflation is still running pretty high next year, then another 3% hike, we start to get into real positive earnings, other than the negative earnings in real terms that they're seeing right now. But it's, as with everything in Japan, it's never a quick fix. It's always a long drawn out affair. So even this won't be the end of the story, unless we get something really stratospheric for the wage details. But even so, and even among them trying to get wages up, the ruling party is still looking at fiscal considerations. They are proposing a 30,000 yen cash handout to low-income households and an additional 50,000 yen per child. That was Kyodo citing a senior party lawmaker there, so still heavily on the fiscal front there. Bank of Japan's Kuroda said that the BOJ must maintain current monetary easing, but there will also likely be scope to consider steps to address side effects of easy policy. Inflation expectations are rising. It's premature to show steps for an ETF exit now. We'll be moving to an exit once the 2% inflation goal is in sight. Not sure about the context of some of these comments. Could you put a slightly hawkish slant on these, Kate? We've heard of it before, but
yeah, I was thinking too, but then, well, okay, I think we have to put all of this in the global context of him being on his last legs. But now that he didn't do anything on the last meeting, now he's going to start to sound like he says, like, all right, we're ready to change something, but he's not in the driver's seat anymore. Or unless there is some surprise move, of course, in between meetings. But Bank of Japan rarely did it, unless big natural catastrophes and stuff. But no, yeah, there is a little bit in there, and it's just, as I was saying, I think he's still preparing the terrain for his successor. They've already said so, that they were going to try to normalize a bit, but it's all going to depend about the speed and stuff, right? Yeah.
Now, I haven't done any digging, but I did catch a headline or something in the news this morning before it all started kicking off. That apparently in their minutes there was something that indicated they may have done a change on the YCC at the January meeting.
No, there were discussions.
Or in January.
There were discussions about it.
Yeah, there were discussions about it. So they are still keeping that under their belt, if you like, or on the table to do YCC again. So it wouldn't be a big shock, perhaps, if we got another move in the YCC, depending obviously on what inflation's doing. So we already know they've gone once. It is likely that they go again. That would be the expected move. Another widening of the band there. Maybe our new mate Urida pulls that rabbit out the hat at his next meeting, but we shall have to wait and see. Back to our most favourite subject, Brexit. And remember that great deal that was struck, the Northern Ireland Protocol deal, signed, sealed, delivered, sorted? Not quite. Northern Ireland's DUP leader, Donald Tusk.
How can you say this with a straight face? I mean, you have to laugh.
I know. If I had my camera on, you'd see me shoulders slouched as I read this headline. The DUP leader, Donaldson, says, "It is my current assessment that there remains key areas of concern within the Windsor framework which require further clarification." On and on it drags. Now, the Bank of England are going to give evidence to Parliament, a parliamentary committee on the SVB UK scenario or shenanigans a date for your diary, Tuesday, the 28th of March. So the Treasury Committee wrote to the Bank of England asking what the fuck is going on. And now they're going to have a committee hearing to find out what is going on. That may give us a bit more insight as to the shenanigans there, more than what we may know at the moment. But 28th of March, so quite a way to go before then anyway. The ECB, a 25 pip hike is more likely than 50 pips this week, says Deutsche Bank. If markets have not
who said it first, I wonder. Sorry, carry on, sorry.
If markets have not stabilized by Thursday, they would not rule out a temporary pause in the ECB hiking cycle. And then probably about 10 minutes later, a Reuters piece citing an ECB source said the ECB are likely to stick to a big rate hike despite the banking turmoil. So there you go. Who said it first, Stel?
Depends on the outcome. No, but seriously, you're seeing what's happening with European banks today. I find it very difficult for the ECB not to kind of try and prop up confidence, even though it's not the right thing to do, right? They should be doing 50. But yeah. I think they're going to succumb to the pressures if they persist until tomorrow, right? It's tomorrow, isn't it?
Yeah.
Let's see.
Yeah, exactly. Now, all this stuff that's been going on, the FT had a piece saying that hedge funds have been stung by this bond market fallout from Silicon Valley. That a lot of funds had been obviously trading in the way of yields rising, the Fed going higher with rates, and that bets in the 2-year yield were around about twice those in other bond markets or other durations, and that has led to forced selling, which is why we saw such a big steep move in the yields, particularly the ones and the twos. Absolutely cratering off from the highs that we were seeing before. They have recovered some, but I don't think we're out of the woods yet, as you can see from these moves at the moment. The 1-year yield we've obviously been keeping an eye on, hasn't been able to get above the Fed midpoint. Again, this is not a technical level. This is more of a sentiment level in terms of where the market sees the Fed going. One moment we were above 5% and sailing high. The next minute we're below the actual Fed funds rate, which is a bit of a disparity to where obviously interest rates are at the moment and where they're potentially going. But hedge funds apparently getting a battering, as we saw over the SVB stuff. Now yesterday we had obviously CPI, and as I mused, it didn't get too much attention, with the market quickly swinging back to the banking stuff, partly due to the fact that it all came in all in line. It confirmed the 6% expected dip from 6.4% in the headline, and the core dropping a pip to 5.5%. We traded that for about 10 minutes, and then we got back into the rest of the stuff. So looking at it, because we've got to put it in the pot for the fundamentals, the headline confirmed coming lower, but that core still looks a bit sticky. It came in lower as expected, but only a pip lower, and this is where the problems are maybe going to lie, in that core number coming down. You'll remember the PCE core number actually went up. So as much as the headline can keep coming down, central banks then switch their accounting view to looking at the core number, because this is the more domestically driven number. This affects things on the ground far more than the headline number does. So still sticky up there. Data that should suggest that the Fed continue with their hiking path. And as Stel mentioned, maybe the market may get a bit more cautious, or both central banks, ECB and Fed, get a bit more cautious with this banking stuff going on. And we'll talk about that in a moment. So one thing that did stick out in the numbers as well was the real average earnings. I don't think it shows the year-on-year numbers here anyway, but the month-on-month number was down 0.4%. The year-on-year average hourly earnings was down 1.3%, not as bad as the minus 1.9 previously. but the real average weekly earnings year on year was down 1.9%, matching the prior minus 1.9%. So still in real terms, wages at a negative, and that is something that it takes a bit of heat out of the Fed because there's no wage price spirals, upward wage price spirals, but it also means that there may be, because firms and people who work will want wages to be in positive territory. So again, it's something to consider when looking at the Fed. Fed Bowman said that the banking system has strong capital and liquidity, and the Fed board is carefully monitoring developments. This was in a community banking appearance, so nothing to do with monetary policy because we're obviously in blackout, but past comment that the banking system is A-OK. Regulators apparently and the Fed are going to consider tougher rules for mid-sized banks after the failures of SVB and Signature. There is also Democrats are said to be looking at repealing some of Donald Trump's easing of banking regulations that he put in place when he was in the hot seat. Senate Banking Panel Chairman Brown said he hopes the Fed will not change rates next week. So politicians trying to put their thoughts over onto Powell. Now, there's been some, before we get into the stuff that's happening, there's been some other geopolitical stuff happening overnight and this morning. And the US military reported that a Russian fighter jet struck a propeller of a US Reaper drone, forcing it to crash over the Black Sea. The State Department said they're engaging directly with Russians at senior levels to convey their strong objections over the Black Sea drone incident. And a US envoy in Russia said they conveyed a strong message to the Russian Foreign Ministry. The Russian Defense Ministry obviously replied, saying that Russian fighters do not use onboard weapons or came into contact with the US drone. Make of that what you will. Russia views the drone incident as provocation. Now, apparently, if stories to be believed, Russian jets hosed this drone with fuel and then somehow clipped the propeller on the back of these drones. I don't know how good a fighter pilot you're going to have to be to clip a 4-foot propeller on the back of a drone flying at 200 miles an hour, but take it as you will. The long and short of it is this was potentially a bit of a risk event yesterday, you know, directly between Russia and the US. It's all been calm, I wouldn't say calmed down, but it's all been a bit brushed under the rug. Nothing strong coming of that, but we don't want to be hearing of incidents directly between the US and Russia, or it will cause a step up in risk. But it hasn't stopped China apparently deepening its war preparedness planning, according to Xinhua News. Again, this is the bubbling situation over Taiwan as well, whether China is going to make a move into that, but Xinhua prompting that the military will be deepening their preparedness planning. Right, so let's get into what's hitting markets right now. Just when you thought the US banking stuff had sort of passed by without any more skeletons dropping out the closet, Credit Suisse is getting hit this morning. It's been getting hit for a few days now, partly because of their accounts and their statements that got delayed due to a phone call from the SEC citing some issues. They've now been audited, or these statements have now been audited and released. The chairman says that the government assistance is not a topic for Credit Suisse. But then we got a headline from the Saudi National Bank, who are a big shareholder of Credit Suisse, saying that they will give no more money or no more assistance to the bank. That was the headline that first dropped. The market didn't like that, saying that if the bank is in trouble, they'll be getting no help from one of their biggest shareholders. But on further looking at the headline, the reason why the Saudis won't give any more money is because it cannot go above a 10% ownership limit due to regulatory issues. So the market did.
Ryan, sorry to interrupt. You would argue that given that they are a big stakeholder, they don't want to make a statement. They want to say something that tries to limit any more damage, right? They have a stake in this. But yeah, sorry to interrupt. Carry on.
No, it's fine, mate. It's one of these things. Do you believe them? Do you not believe them? The market, given everything else going on at the moment with banks, is taking it negatively, as you might expect.
Yeah, but
UBS, just quickly, mate. UBS were out with comments. They were asked about potential takeover of Credit Suisse, as is often the case when this thing happens, and they said pretty much, no, we're focusing on our own stuff. Meanwhile, credit default swaps are blowing out at CS, and the market gaze is purely on that. Sorry, Kay, go on, mate.
No, I mean, but aren't the Saudis shooting themselves in the foot? Because if there is really a rule about the 10% rule, if the stock goes lower, they are forced to sell. Because there are outstanding amount, or unless because their outstanding monetary value that they put in there is going to be higher than the 10%, right? Or is it just calculated in stocks? But if you put 2 billion in a bank, which is 10%, and if the stock devalues by 10%, you should be selling some stocks, no?
No idea. I agree with you on paper, but I don't know the ins and outs of these deals, so I've no idea what they need to do. There could be a tons of caveats in that, and limitations, because also you can't just dump a load of stock without letting the market know, if you're that big an ownership. Anyway, who knows? The fact of the matter is, we've come through, or we're coming over this US banking crisis, and now there's a lot of eyeballs on one of the supposed big boys, and if they go pop, that's going to create bigger waves than anything SVB and Signature Bank are going to cause. So how does that play into the
Ryan?
ECB?
Sorry to interrupt you once more. Just one more thing I wanted to add regarding CS. There's been a lot of chatter about UBS acquiring them or merging or whatever, and they did make a statement like half an hour ago where UBS CEO said, our strategy is organic, we are focused on ourselves. So that kind of takes UBS out of the picture as well. And that's, I think, what's pushed CS was trading like down 10% on day, now it's down 20. So it's not looking good. Yeah,
exactly. So it does put some focus onto the ECB, as Stel mentioned. And I still maintain, if either the ECB or the Fed don't hike as expected, maybe the ECB only go at 25 instead of the 50 expected, and they cite these banking problems as the reason for doing so, that's going to extrapolate over to the Fed, i.e. the market will then almost take for granted that the Fed is going to do something similar, or at least be as cautious. If the ECB go ahead and hike 50 tomorrow, but say that obviously they're watching the situation and they're ready to step in and help out or do whatever's necessary, that also will change some of the less hawkish Fed expectations that the Fed will stop or slow hikes as well. And the market will think, well, if the ECB are carrying on, the Fed will carry on as well. But this Credit Suisse stuff needs to be monitored. Whenever we get problems, financial problems, Credit Suisse are always in the frame. So we've been here before. Maybe, I don't know whether you guys agree, maybe it's a bit more dangerous now in the current environment than it has been in previous times. They always seem to be circling the drain, Credit Suisse. But for the moment, it's risk off again. The market taking a very dour view of this, coming on top of all the rest of the banking stuff. Should we be really worried about Credit Suisse, or is this just another, another time when Credit Suisse, everyone decides to batter them?
No, I think this is a worry.
Just
because of the whole European sphere involvement in Credit Suisse, and it's already happening. BNP Paribas, SocGen, the French banks are already limit down. I think the market made quick calculations that if Credit Suisse would really go down, that's bad news for the European banking sector right now. And it's a different animal than SVB. I mean, it's uncomparable. They are a much bigger organization on the global risk board. No, I think it's no, it's a big deal. If they really go down under, it's a big deal. But then again, well, I think we can expect now some really urgent meetings again all around Europe to see what's to happen with it. And I mean, we can speculate on a lot of options here. Either bail them out, either find a white knight, find buyers, most likely. But yeah, there's a lot of speculation going around. But I think this is not good news, especially looking at how fickle the markets already are. If you look at even not talking about, you mean European yields just priced out 30 BPs of possible, and it's even more now, 30 BPs of possible hikes. But it's even dragging the US yields down. I mean, we before the Saudi headline, the US 2-year yield was trading at 4.40. We are trading at 4%. I mean, it's an absolute, it's carnage out there, and I would be very careful. And we might see, if ever they find a quick solution, we might see a violent rebound in risk, because that's how the market looks to be trading it right now. But I think it's a different kettle of fish than the SVB problem.
Yeah, so Mark makes a valid point, and that was something I was going to ask as well. That UBS will take them in the end if the SNB makes them, just a question of price and conditions. Would this create proper contagion, or would there be a little bit of panic, but then the vultures will just swoop in and pick it up, and 2 days later it will be done and dusted? Credit Suisse is no more, it's part of UBS, part of whoever, and there's no worries about other banks, because Credit Suisse is a bit of an island on its own, isn't it, in the banking sector, in terms of all the problems it has. Well,
if you were in the US, ask Bill Ackman, but on the European continent, I don't know. Is Georgie still in the picture? Soros, he may have a say.
Yeah, I'm just wondering if we get a headline, CS is bankrupt or whatever, or stops trading, and then but it's resolved pretty quickly with someone coming in and sweeping them up, rather than spending weeks worrying about whether other banks are going to go pop. It just becomes a bit of a flash in a pan move. Like Mark says, UBS swoop in, they can pick it up for peanuts instead of paying good money for it. They fold it in, and we're done and dusted in a week's time. I don't know. I think it's something to consider. That while the market may get hoppy if they go pop, it may not be something that lasts too long, because the vultures will be swooping in, as I say. But it is what it is for now, and we need to trade it. So what's been going on? Well, dollar yen was looking pretty up towards, let's get a bit of a cleaner look at that, up towards 135s. Managed to stick its nose above. Now it's been slapped all the way down to pretty much the low 133s. So we're not out the woods on the fear and where the yen is going and where risk is going. I didn't put a bit of a note in the chat room this morning saying that how the market is going to remain a bit skittish for the foreseeable. There has been nothing more on the US banking side really that we need to worry about in terms of other banks going, but people are still on watch for any further fallouts. It's going to be a tough ask to get the market going back to where it was before. The case in point with yields. Even if the Fed, even if the ECB stick to their guns, ECB hikes 50, says they continue to hike. Fed hikes 25, says they're going to continue hiking. It's going to be a tough ask to see things like yields getting back to these highs, at least in the short term. as we said from the headlines, hedge funds have taken a battering on those bets. They're not going to be rushing back in to those very quickly. It's going to be tough to see the 10-year yield getting back to that 4% mark and above. It may creep up there, but it's not going to happen in a couple of days. So I think you're going to need to look at the markets with a risk-off tone for now. That perhaps any rallies in risk get sold off. S&P's getting battered again. I did jump into a long and made a bit of money yesterday off of this. I got in at 38, 88, 87 because I thought that the market was going to be a bit positive yesterday with all the banking stuff and no further problems, and we got the rally up there. But look at it now. Now we're busting back lower because of these risk moves. So there's enough here for both sides. If you're stock shorter, if you're risk shorter, you're going to make money. If you want to buy the dips, you're potentially going to make money, but you've got to roll with the punches on this one. And I'm not staying in any trades longer than I need to. I'm taking profit, partial or otherwise, when it's on the table, locking in the rest as quick as possible. As for trading ranges, really, it's, as I say, it's just a case of being nimble. I'm not picking a side. I'm not having a bias to any one side. The only thing I've got on my book at the moment is euro sterling longs, which, as per usual, doing not a lot in the middle of all this mess. We got a good move down yesterday, down to the zone, my zone down here, a decent bounce as well, but that's giving it up. We're mooching around the 88 figure, 87.90. Keep an eye on that one again. Trade the ranges if you get a chance, but don't hang around too long. You boys looking at anything? I know you're pretty much the same, Kay, just out with a sniper rifle rather than looking at holding stuff for more than 5 minutes.
Yeah, and Stelios, do you, because I think Stelios wanted to perhaps comment a little more on the stories or looking at stuff. Stel, if you have.
Yeah, no problem. First of all, I said yesterday, I think this Silicon Valley bank story, it's very difficult to not see some kind of contagion / spread of fear in other markets, and we're seeing it today. And I have to comment on one thing, right? We were talking about CS. I used to work at Merrill Lynch back in 2008 when we practically went under, got bought by Bank of America. I can tell you this, a lot of people knew the dire situation before it became public. And, there were people, selling Merrill Lynch stock like there's no tomorrow. And, I was speaking to people saying, I don't understand it. I couldn't comment, obviously, but, it's when something's this bad is happening, there's always a reason. That's what I'm going to summarize it as. So I'm sure there is something at CS which is really not good. I don't know what they have in the balance sheet. I have no idea what kind of risk they're running, but where there's smoke, there's fire. So that's what worries me a lot about CS and about the other banks. Like French banks are down 10% today. Sorry?
Still, you're saying I'm not sure what CS is running. They're running everything, mate. Everything that can go wrong.
Yeah, exactly. The question, though, becomes what happens? Who comes to the rescue? Is it going to be another bank? Is it going to be the S&B? Somebody's going to rescue at some point. I don't think they're going to allow a failure of this magnitude. Meanwhile, though, the banking sector is shaking. And you can't get around that. And when that happens, stocks go lower. So and risk in general, people try to sell everything they can. And we've seen this in 2008. I'm not comparing it. I don't think it's the same, but there are tones of that. So and remember, we hadn't seen anything like this proper since 2008, right? So it's a tricky situation.
Yeah, and I think coming your way that we see the worst risk of, or we have to be the most careful when it's the banking sector getting hit. You can hit whatever other sector. Of course, it's going to be bad. We have the what was it, green something, the boat that got stuck. Then we had we're having, of course, underlying geopolitical issues, which are, of course, big and bigger than probably anything else. But if the banking sector gets hit, it's a direct hit to the market. So that is where we have to be for the people listening and don't have any experience on the longer term. If something is rotting in the banking sector, then it's really hitting the markets very hard, usually.
Yes, absolutely.
Yeah.
Yeah.
Yeah, go on, mate.
No, carry on, and then I can continue.
Yeah, I was just going to say, obviously the SNB is the big bank in the forefront of this, obviously being Credit Suisse, being Swiss and all. So that is potentially planning to rate expectations as well. And it was quite strange because even when we were getting all this stuff going on with the US banks, beginning of yesterday, the SNB was still being priced at a 50, an 89% probability, with a 75 being priced as a 10% probability or 11% probability. In the afternoon, that flipped to pricing a 25 at 70% and a 50 at 30%. And now this morning, we're pricing a 25 at 98% and a 50 at 2%. So there has been a big swing around for expectations for the SNB, likely in part due to what's going on with these banks. We've been a bit sparse of SNB comments, so perhaps that's what we need to be on watch for if they do decide to come out and say anything. It's funny though, because this stuff, it's not come about because of any exposure to SVB or anything like that. It's come about purely because of these inconsistencies in their year-end financial statement that had to be addressed and adjusted, and they've been audited now. What exactly is driving this stuff in Credit Suisse? Do we actually know?
But it's been going on for years, right? And it's just one on top of the other. And now this and the market just had enough of supporting them. There's been and every board over there has been messing stuff up one way or another. It's just a one on top of the other, and then the latest one, yes, is those accounts and stuff. So yeah, I mean, it seems like there's virtually no governance in Credit Suisse. And where they should have strengthened all their internal rules and accounting and bookkeeping, they just failed to do it. And
yeah, I guess if there was a statement saying they've got 50% exposure to SVB, then you can understand it. But I agree with what you say. I just don't know if there's a real catalyst for why we're getting this move. Something actually intrinsic. So it could be that nothing happens and it all recovers a bit once we get over these jitters today, but who knows? We can only trade what's in front of us. Kay, do you want to have a little look around?
Well, was there? I was just Ali. If SNB changes his mind, can we see Euro Swiss back at 101? There's something where we tend to forget. There's a bank we tend to forget about, and a lot of people might not even know what they are doing. But there's the central bank of the central banks, which is the BIS, which is also based in Switzerland. It's the Bank for International Settlements, and they may be part of, if it gets to a global crisis, let's put it that way, they will probably be part of any discussions that other central banks may have, and they have the power of putting regulations in place as well. So we may keep them in mind. I'm not saying that they will be involved, but I think the BIS is perhaps even more than the SNB as such, because I think the SNB may be part of a governmental plan, but the BIS has international powers, and they could be part of any discussions, negotiations around Credit Suisse, in my opinion.
Well, funnily enough, the SNB have just commented on Credit Suisse after the drop in stock price by saying no comment.
Oh my God.
So yeah, they don't give a monkey's, old Jordan. He'd probably go and buy it himself as part of his retirement fund.
Okay, and then the comment on the Swiss franc as a currency. Right, there's two possibilities, and we have seen that in prior crises. There's actually three things that we should consider. We've seen that in prior crises, and the biggest one was unfortunately a big natural event, which I lived actually live, because I was over there, is when the Japanese companies had to repatriate massive amounts of yen over the big quake, because they just didn't know how much rebuilding, how much damage there would be, how much rebuilding there would be to be done. So you had this massive repatriation flow in Japanese yen. This is a different event, but the result could be exactly the same. So if people decide to because Credit Suisse will have foreign investments, foreign involvement in a lot of stuff. If they decide that Credit Suisse has been, they may have to close positions, and that may involve big repatriations of Swiss franc at first. Secondly, the Swiss franc is still seen as a risk currency, so I'd say be a little bit careful right now with what is going on, because we may see repatriation flows, although they may have happened the past few days because Swiss franc is already stronger. But I do think that in the end, once it's done, and once the repatriation flows are done, I'd say there is a fair chance that Swiss franc would weaken a bit, because it's their second biggest Swiss bank. But yeah, it could happen in several stages, and how or when those stages will pan out is a bit of an open question to me.
And obviously, then you've got to take, in this situation, you've got to take the SNB into consideration, playing both sides of the market. You know, so it's not like other central banks will leave it alone, and any repatriation will take the prices where they want to take them. But you've got the SNB potentially sucking any volatility out of any of those moves. So it could be a mess.
Yeah,
but
I mean, Swiss franc. Yeah, Swiss franc may be the toughest currency to trade in all this thing. Actually,
yeah, because if
I
you think,
don't know. I mean, intuitively, I would say, sell Swiss, but and then is it Euro Swiss that you want to buy, Ali? If all the European banks are involved in Credit Suisse, as we've seen already, the BNP and SocGen shares coming off, do you really want to buy Euro Swiss, or would you rather sell dollar Swiss also? I don't buy dollar Swiss also. I don't know.
Yeah,
and have to be careful what's going on.
Demetrius has mentioned it, but let's not even mention Swiss yen. That's going bonkers.
But that's the.
So, you want to get out of one frying pan into a fire. That's one for it. So yeah, Stel, did you want to have a look at anything or take anything, or shall I just pass the baton to Kay?
I can. Do you want me to look at stuff today and then Kay resumes tomorrow? What
you go ahead, mate.
What do you want to do? Okay.
Yeah, you go ahead. But
if you break it, be my guest, my friend.
Yeah, no problem. I'll do that. Okay, so I'll take 5 or 10 minutes max and go through a couple of things. So obviously the big mover is yields dropping and stocks of risk assets dropping as well. This is obviously on the back of the banking stuff that we've been talking about, and it's a tricky situation. I've talked about the 10-year US. This area around here, there's a lot of confidence. We did bounce once, bounce twice. Are we going to bounce again? I don't know, but it all rests on what the ECB is going to do and what the Fed's going to do, and basically the reaction of central banks to this banking crisis, however you want to call it. And I fear that that euro pound long Ryan, I wouldn't feel very comfortable with euro longs. I think that Lagarde is gonna pull another one, as she always does, and be dovish. And I think there's a growing chance of that they're going to do a 25. I think it's more than 50-50 that they do 25 tomorrow. And I know I may be a contrarian. They've talked about 50 for a while. They reaffirmed it, I think, yesterday as well. But if this situation continues, I think they're going to err on the side of caution. These central bankers, they always do. They always want to find reasons to cut rather than finding reasons to hike. And we saw this firsthand. Inflation was screaming higher and it was like transitory. It's going to come down. No, you have to act. When things are looking back, they act straight away. But when things are looking like, inflation is going higher and all that, they always delay. So I don't think they should. I don't think the ECB should be doing 25, but I think they will. Or at least the probabilities are most likely that they will. I don't know what the ONIA market is pricing in terms of. Do you have a page that shows the probability of what they're going to do tomorrow, Ryan? There was some kind of market watch. Anyway,
I think they take the. I think they take the Sonia rates on this one.
The ONIA rates, yeah.
So we're pricing a 25 at 52. It's pretty much 50-50.
There you
25
go.
At 52, a 50 at 48.
Okay. Now, having said that, look at what the Fed fund futures are pricing for the Fed. We're pricing only one hike now, and that's in May. And we're pricing very little in next week's meeting. And then we're pricing cuts starting very quickly after May, which I think, again, is going a little bit overboard already. Obviously, if we do have a fully blown banking crisis, then who knows what the central banks are going to do. But I don't know. The market tends to go at extremes very quickly. But we have to see what the ECB does tomorrow and what the Fed do next week. And as I said before, I fear that the central bankers are going to always err on the cautious side and deliver less tightening than markets may expect. So yields are crashing. The Bund is doing, well, it's breaking out, right? It's trying to break out of this wedge. So it's a 10-year Bund. So technically, we're at a crucial level. And I think tomorrow is going to be the day of reckoning. Either we fall back within the wedge or that's it. Rates are going a lot lower. But for now, yields are dropping fast and risk is also falling. And, we talked about 39, 35. I wrote it on the chat room. I tweeted about it. And I think we stopped. Where did we stop yesterday? 39, 36.7. There you go. So that was a, I mean, look at this technically. The 200 DMA has been touched 3 times. It was perfect. Anyway, it looks like it's risk off, and until the banking situation is resolved, I don't see why we shouldn't be selling rallies. I said yesterday, I think the path of least resistance is go higher, but obviously this situation with the CS and the French banks and all that had not materialized as it has been today. It was a lot calmer yesterday. So it's a very tricky market to trade. And I think, as Ryan said, you get the trade going your way, take some profits, unwind, scale in, scale out. You have to be nimble. I don't think this is the time to be holding, 6-month trades, although, this is what I want to do eventually with silver, but that's a different story. Now, the other thing I want to talk about, cryptos are actually very resilient. I would have expected at least Bitcoin to be dropping a lot faster than this today, given risk off. But it just goes to show when there's a problem in the banking sector, people try to move their funds to anything else, right? Anything else, tangible or not. Get it out of the banking system, or get it out of deposits, or do whatever, and buy anything. And I'm guessing that cryptos is one asset class that has been the recipient of that. And by the way, I don't know if you guys saw the Silicon Valley Bank aftermath. So Bank of America getting 15 billion in new deposits amazing. So there's going to be consolidation in the American in the US banking sector.
Isn't the crypto space always the anti-banking?
Well, that's one of the principles, I guess. But yeah, I mean, cryptos have been doing very well. I have to say, I'm very, very surprised by that. Usually, Bitcoin, the S&P goes down 1%, Bitcoin goes down 3%, and they have been doing very well. So I have to, give it to them. They have been doing well. Euro pound, we talked about. I know you're a little bit long. I think I would be very careful going into tomorrow's ECB being long euros. Obviously, now pricing 50-50 for a 25 or a 50, you're going to get a move either way. So the euro could well spike if they do 50. But, it could be a dovish hike, a dovish 50 by the Lagarde. Who knows? That's the thing. Sorry?
That's going to be a shock if they do 50 tomorrow.
I think so.
I wouldn't like to be long bank stocks if they do 50 tomorrow.
Yeah. Yeah, it's all about confidence. I think I really think, knowing what I know of central bankers for the past 20, 25 years that I've been trading, I just don't see how they're going to be hawkish. Having said that, today's inflation in Spain, France, higher than expected. So there's a problem. There's a big problem out there. They're going to have to solve it somehow. Yeah. The euro dollar, coming down, but again, I've talked about this for a while. I still think we're in a range, and I know it's a wide range, but yeah, it's a tough trade. I don't have any positions in that. Metals I like, obviously, in times of distress, gold and silver do get inflows, and that's what we're seeing today. Gold is up, silver is up a little bit. Platinum on the other side, industrial metal a lot more than gold, and perhaps silver as well is getting getting whacked today. But overall, I still like metals. I'm long silver. I'm now nicely in the green, but I'm very careful about developments. If I see any kind of panic move, because you know how it happens, right? People will sell anything. Look at 2008 when the crisis hit. Gold and silver got hit really badly, and then they just flew. So have a look at that actually. So this 2000, actually maybe not a quarterly, monthly is a lot better. I remember this because I was trading at the time. So from February to November, gold went down from 1,000 to 680 or 700. That's a big drop percentage wise, and then that was it. It was liftoff. So I'm wary of such a move happening again if the situation continues to show signs of 2008. But yeah, let's see. That's pretty much it. I mean, currencies, I am still looking at the dollar MEX. I want to sell it, but obviously I'm not touching it here because the dollar in times of distress is going to be, there's going to be inflows. There seems to be a big level around 1910 and 1915. We tested it twice. Should have sold it there. I've been looking at it, but I kind of chickened out. I'll maybe try that. The carry is really good, but it's scary. It's scary. Dollar Norway, another one I want to short, but look, we're toying with the highs, and I want to see how this resolves. I would love to see a move towards 11, but again, it's going to depend on the Fed. So that's roughly what I'm looking at. I don't have any immediate ideas, and the only trade I'm really running is silver longs at the moment. So just sitting patiently. And that's it.
That dollar MEX is a good marker for risk at the moment. We spoke about it yesterday. If you want to fight a trend, if you want to fight this risk off stuff, and there's a few things you can do it in, like the S&P's down into 38k. You've been highlighting the big figure tennis, 38, 39. Those highs were made in the MEX over all this banking stuff, and everything that's gone on, it hasn't been able to take out those highs. So it gives you places, if you want to trade, that's where you can set your risk against, because the market has gone there once. He said that's enough. It tried there a second time. It said, no, you're not. The S&P's got down to 38, 11 or something yesterday or Monday. Couldn't get any further. We're having another look today. Can't quite get down there. These are the levels that the market's saying, okay, we're going to trade the risk, but that's as far as we're going to let it go. And if you want to fight some stuff, always look for a reason. And your reason is in the price action. And the price action is giving you levels that says, right now, we're not going through these levels. If the price goes through that level, then fine, something's changed and you get out the trade. But if you want to fight some of these moves because that's the way you're inclined, let the price action do the talking and lean against these levels that are being defined for you.
Yep, that makes a lot of sense. So those are the level. That's the level I'm looking at, and I'm going to be. I think depending on how things go, I think I'm going to be taking a short, but with a pretty close stop. Yeah. I don't want to risk too much on a trade like that, especially on a market as moving like it is now.
Yeah, definitely.
Anyway, I'll give it back to you. I didn't have much more to say.
Okay, you got anything in particular you want to flash at us?
No, I think we covered it's just risk, right? It's risk in the global term. I'm also looking at the clock. It's just risk. I mean, just without picking the screen, 133.5 is about the top end. Is where the top of the daily cloud lies in dollar yen. Keep an eye on that level. There's a bit going on in this 127 in cable. We are turning around. And dollar rand holding very well the low 18s. Something to keep an eye out. And then sorry, I'm rushing through it, but dollar makes look at 19.1025, I'd say. And what else? Yeah, euro is just probably going to be the lows of the latest move. I'm not going to touch it with a stick anyway. But we can see if any white knight comes on the scene, or if we get this some official comments that they are saving the world. Euro will probably rally, but if we'd ever see a rally into tomorrow's ECB, I guess that will be the top, and it's going to go lower again. I'm starting to feel very iffy on the euro, and not only because of Credit Suisse, to be honest, but also the inability of really rallying against the currencies that I thought it would be rallying, like sterling, Canada, Aussie. It hasn't, even before the Credit Suisse debacle. Okay, and on risk off, they should have really gone a lot higher, and they didn't. Those processes. So I'm starting to change opinion a little bit in the euro myself.
Yeah. Okay, all that's left. Keep an eye on the data. We do have some data out today. We've got New York Fed manufacturing, the first manufacturing data of March. So that's often watched. We've got PPI as well, although that's probably going to play a bit of second fiddle to the CPI we got yesterday, but it can be a bit of a leader into CPI. And we've also got retail sales, which are expected to drop 0.3% from that Goldilocks number of plus 3% last month. So keep an eye on that one as well. There is still, as I say, data in the pot to be considered for these central banks. That's that for today. Let's hope for a quiet one tomorrow, eh? No chance. Thank you, Stel. Thank you, Kate, for all your valued input. And thank you to all the viewers as well for coming and watching us here. Cheers, guys.
Thank you. Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.